Welcome back to Debt-Free Dreams, your go-to channel for achieving financial freedom through smart cryptocurrency investing. Today, we're covering one of the most essential skills every crypto trader needs to master: how to set stop-loss and take profit in crypto trading. Whether you're a beginner or a seasoned pro, using these tools effectively can protect your portfolio and maximize your gains. In this video, you'll learn what stop-loss and take-profit orders are, why they're crucial for successful trading, step-by-step instructions on how to set them up on popular crypto platforms. Stick around because I'll also share pro tips to avoid common mistakes that even experienced traders make. Check the description below for links to essential trading tools and other videos to help you level up your crypto game. Let's dive in. Part 1. What is a stop-loss? A stop-loss is a trading tool that automatically sells your cryptocurrency when its price falls to a predetermined level. The purpose is simple: limit your losses before they spiral out of control. Here's how it works. Suppose you bought Bitcoin at $30,000. You set a stop-loss at $28,000. If Bitcoin's price drops to $28,000, the stop-loss automatically sells your position, preventing further losses. Why use a stop-loss? Minimize risk. Protects your capital by capping potential losses. Avoid emotional trading. Automates decision-making, so you don't panic sell during volatile swings. Focus on strategy. Allows you to stick to your plan without constantly monitoring the market. Part 2. What is a take-profit? A take-profit order is the flip side of a stop-loss. It automatically sells your cryptocurrency when the price reaches a target level, locking in your profits. Here's an example. You bought Ethereum at $1,500. You set a take profit at $2,000. When Ethereum hits $2,000, the take profit triggers, selling your position and securing your profit. Why use a take profit? Capture gains. Locks in profits before the market reverses. Discipline. Helps you avoid getting greedy and holding too long. Reduces stress. Automate selling, so you don't have to monitor price levels 24/7. Part 3. How to set stop-loss and take profit on popular platforms. Let's go step by step on how to set these orders using some of the most popular crypto trading platforms. 1. Binance. Stop-loss. Go to the spot or futures trading section. Select your cryptocurrency and click Sell. Under Order Type, choose Stop Limit. Enter the stop price trigger point and limit price to sell at. Confirm your order. Take profit. Similar process, but select Take Profit. Limit under Order Type. Enter your target price and confirm. 2. Coinbase Pro. Stop Loss. Go to the Trade section and select your asset. Click Stop Order and set your stop price. Confirm the order. Take Profit. Use the Limit Order feature to set your target price. 3. TradingView for alerts. Use TradingView to set up price alerts that notify you when your stop loss or take profit levels are reached. This way, you can manually execute trades or ensure your automated orders are working. Pro tip: always double-check the fees for stop-loss and take-profit orders on your platform. Hidden fees can eat into your profits. Part 4. For common mistakes to avoid. 1. Setting stop-loss too tight. A stop-loss set to close to the current price can trigger prematurely due to normal market volatility. Give your trade some breathing room. 2. Forgetting to adjust for market conditions. In highly volatile markets, widen your stop-loss to avoid unnecessary triggers. 3. Not using both together. Always set a stop-loss and a take-profit. Without a take-profit, you might miss locking in gains. 4. Over-leveraging. For futures trading, don't rely solely on stop-loss orders to manage high leverage. The market can move faster than your order can execute. Part 5. 3 pro tips for success. 1. Use risk-reward ratios. A good rule of thumb is a 1-to-2 ratio, meaning your take-profit target should be at least twice the distance of your stop-loss level. Combine with technical analysis. Use tools like TradingView to identify support and resistance levels if you're setting your orders. 2. Diversify orders. For larger positions, consider splitting your stop-loss and take-profit levels into multiple orders to reduce risk. 3. Practice first. Use a demo account to experiment with stop-loss and take-profit strategies before trading with real money. Setting stop-loss and take-profit orders is a game changer for crypto trading. These tools protect your capital, lock in profits, and reduce emotional decision-making, all crucial for long-term success. If this guide helped you, hit that like button, subscribe to Debt-Free Dreams, and turn on notifications so you never miss valuable trading insights. Also, check the description below for links to essential trading tools and other videos to help you level up your crypto game.